Okay, good afternoon, everybody, and welcome to the first of our APS NZ Tax Clinic webinars. I'm Rob Anderson. With me today is Product Manager Nigel Babington and Client Success Manager Andrea Roberts, and we'd like to thank you all for taking the time to join us today. So, huge apologies for the technical difficulties yesterday. We're just glad now that we're able to get things working today. So, moving on to the software, I need to start with another apology, and that is for the pain and inconvenience that's occurred as a result of the changes in the August tax release. We acknowledge that the quality of the release was not at the level we've worked so hard to achieve over the past 5 years. Now, we're going to talk to Nigel shortly about some of the circumstances that led to the current situation, but we wanted you to know that we appreciate the difficulties you've faced. We have been working and are continuing to work to rectify all of the issues. Internal steps have been put in place to ensure that a similar situation will not happen again in the next or future releases. So before we grill Nigel, I'd like to tell you what's coming up in the webinar. Firstly, we'll talk about the reasons why the release did not meet our usual standards. We'll then work through the items that have been at the forefront of the issues and look at some live examples. And this will include some recommended process steps that can be taken to deliver the required results in reports and the 901 application.
So everyone, we're not going to get an opportunity today to take and answer questions. What we'd like you to do, there's a couple of different options. Either enter the questions you have in the question box down in the bottom of the side panel, and we will address these in the next webinar in 2 weeks' time. We also have the email address here. It is the support@reckon.com email. So you can email through questions after the webinar, and also please provide any specific examples that you would like us to have a look at. So things like snips of ledgers and so on. So that would be great if you could do that. Back to you, Rob.
And we need to put that email subject line in, don't we? Did you say that?
Sorry, yes. So the email subject line, so that it doesn't get lost in other support calls, could you please put APS NZ Tax Clinic 1 in the subject line?
Lovely, thank you, Andrea. So coming to you, Nigel, what have you identified as the reasons for the problems that occurred in the August release?
Yeah, thanks, Rob, for that intro. And yeah, just want to also echo our disappointment with the quality of the release. As you'd know, we've been flat out for a significant period of time getting ready with TDS and some of the impact that that's had, getting those return lodgements available through gateway services. In reviewing a lot of that data, a decision was made to make a fundamental change to the terminal tax calculation. And this is going to allow much greater future automated matching of ID assessments. There are a number of changes with the way ID assessments come through now, and it became clear that it was necessary to handle things slightly differently because of the various ways that assessment matching could now be applied. But however, as you've seen, it's clear that we didn't allow enough time to have a proper consultation process with clients before introducing it. So that change was demonstrated at the tax workshops through September. I know many of you did attend, but obviously not everyone was there. And I guess we do realise as a result of the feedback that we didn't highlight the impact that this was going to have on the tax summary report sufficiently. I guess to add to all of this, we were under pressure to get the release out. Everyone knew that we were running a little bit late. We had hoped to have it out by late August, and we were well into September before we were getting close to that release. And we wanted to get the new web GST forms available as soon as possible. And as a consequence of just that pressure, we had a last couple of bugs that were identified but just weren't sufficiently tested when they were supposedly fixed. And then I guess to add insult to injury, we had some hotfix version controls that actually introduced another bug while resolving one of the original bugs that were identified. So yeah, not to make excuses, but yeah, that's again, there were reasons, not reasons we like to have to own up to, but that's just the position we're in.
Okay, shall we move on to some actual examples?
Sure. Okay, so the plan for this workshop or this webinar is really just to take you through some of the examples of the issues that we expect you to have been encountering and give you some potential workarounds or solutions to that, or information on when those things will be resolved. So I'm going to be mostly working in the 901 processing page. So just a heads up around, obviously around the 901, with the move to balance-based calculation of that terminal tax or the end of year tax calculation figure. There was a change that brought through the prov outstanding value into the 901 screen. And one of the essential items now, and again, we'll look at potential enhancements to this, there is now a need to push the provisional outstanding figure through into the provisional calculation field so that you get a combined total of provisional and terminal adjustment value to give you a total tax payable that is true.
So just clarify, Nigel, that provisional outstanding wasn't available when it was a terminal tax date.
That's right. In the pre-August release, it was the terminal tax was just sort of a balance calculated at a moment in time, but it was only just for the terminal tax account. So if there was any outstanding balance in the provisional instalments, they weren't being reflected, and that was again one of the reasons why, as part of this move to a running balance or a balance-based management of the accounts, that we've made some of these changes. But so what that does mean is there is a SUP setting which is required to be set to enable this update all provs button. So many of you won't have had that enabled in the past. You can do it individually. You can just do a right click on a thing and yeah, they've already been done, so it doesn't show that item. But there is the ability to individually transfer the prov outstanding across, but there's also this button which does it in bulk. Again, we'll come back to it, but one of the things we would recommend is that initially you select and delete all of the entries that you have. Obviously, records that have already been processed is fine, they'll be retained, but if we delete and refresh those lists, some of the values that would have been set up initially and then had amendment through the version controls won't necessarily be reflected in the terminal value. So we'll come back to that when we round up, but anyway, that's just to give you that information. All right, so we'll just start looking at some examples. So let's just go to our first one. All right, so this here is an example where we've had the 1 cent issue. Now in this case, it's actually been rectified through a version control fix, but basically what has been happening here, if we unwind the match, what was happening prior to the fix is that when this transaction was matched to the refund due, it was actually readjusting this figure to be different to the RIT figure on which it should have been based. It was actually making it different by a cent by the amount of the variance. But now that has actually been rectified, so create the variance, and now it is reflecting and giving a zero balance.
Nigel, what people would have been seeing was a 2 cent variance there on occasion?
Yes. Or it's a 1 cent variance, and then this refund due figure would have actually been adjusted by and would have become 846.08 or 846.06.
606. Yeah.
And it left you with a running balance. If you have any of those scenarios as the software sits now, you should just be able to unmatch and rematch, and that should resolve that issue. Okay. One thing just worth pointing out again is that in terms of the variances that are created, the variance that is assigned to the year-end tax refund element, in terms of the tax summary report, if we have a look at that variance is not being reflected in this balance at present. So we'll be welcome and open to some feedback on whether we should be including that. One of the reasons that bug was originally being created was that we were effectively applying the variance and then recalculating the entire this calculated figure, and by including it again, it was doubling up It was basically adjusting this figure incorrectly to take into account that variance. But that's say this is where we are now. We can, if this becomes an issue, we can look at making further changes around that. All right, let's look at another example. All right, so in this example, we have again one of the issues, that issue that was generated by one of the version controls. It was trying to do the recalculation, but it wasn't dispensing with the variance transaction that may have already been created. So in this case, we've ended up with an incorrect balance because this variance should not be there any longer. So at the end of the talk, we'll talk about another version control that we have planned that will resolve this, and we'll also be able to deliver that through the TDS overnight release, which will mean that it'll just be automated and that'll remove those invalid variances. But anyway, for the way it sits now, we can, if we want to just do it manually, undo the match and redo the match. Okay. And in terms of the net effect, one of the things that this demonstrates as well, just so you're aware, you'll see that we have a net zero balance in terms of the provisional instalments. One of the again, some of the feedback around the way that 901s are generated, depending on where variances are placed, they can affect the balance of this ledger running total, and it's that figure that winds up being the instalment figure that's showing through in 901s. Again, we'll come in and show that in a bit more detail later on. All right, so here is another example of the 1 cent issue. This is one where we've actually retained the issue. So if we look at, we actually had 164.54 as the residual income tax as a credit. And this is where it hasn't actually at this stage been resolved. So we've ended up, this has actually incorrectly been changed to 164.55. Again, by undoing the match and reapplying the refund, matching it through. We do have the 1 cent variance, which is still generated, but it now leaves this value correctly in here. Now in this example, this is also highlighted one of the original faults in the release, that was not taking into account the tax credit value correctly. Now typically when you're generating your tax summary reports, it'll be prior to you actually having lodged the return. So you won't have had things like the actual payments come through. So in this case, we've got a refund credit that's actually come through. I've unwound that just to illustrate the balances at the time of generating the tax summary. But you will have generated the rebates transactions in the I-526, and there's this assumed ID payment that's generated. Now at this stage, we're excluding that transaction from the tax summary. That was the amendment we made, so that rather than these two effectively netting each other out and not reflecting, they should now come through. So if we just go and have a look at that particular example, where are we? 7007. So you'll see that the 164.54 is the refund value, or the residual income tax value that is now shown as our year-end total. And we're including the figure out of the I-526 in the transfers column to give a net balance of the 498.97.87 that would have been reflective at that time if this transaction hadn't been present. Okay, moving on. Let's go have a look. Is that clear? Anyone?
So just backing up with that one, Nigel.
Sure.
So what was happening originally if I'm right, is that there were two scenarios with the IR526s. One was where it was being refunded to the client, so shouldn't have come anywhere near the income tax account, but it was appearing in the tax summary, and that's
correct.
been corrected.
Yes. Yeah. So what was happening?
Then,
The other case was when there was actually that refund was being transferred to the year-end account. So there was a debit or a credit transfer into Inc. and out of tax credits. But the tax credit figure was still being brought through, so that they were netting each other out, resulting in no value being.
So we'll
through.
just backtrack there. So the two scenarios were, number one, the rebate was going through as normal and being refunded to the client, and it shouldn't have gone anywhere near the income statement or the tax summary, and that was coming through, and that's now been rectified. The second example is where the transfer was supposed to be coming into the income tax account. It was being transferred to pay income tax or to be refunded or whatever through the income tax account, and that was effectively contraing each other out, so it wasn't appearing at all.
That's
or
correct.
It was doubling up. There was that scenario, and that's now been corrected.
Yes, both of those scenarios have been rectified. Yes, certainly. If any clients, if anyone has any examples where you still feel that's an issue, we'd certainly like to hear about it. But certainly we're confident that we'd resolve that particular problem.
Great.
Okay, so let's go look at another example. All right, so again, this is probably a good example of where to get around the issue that people have identified. Let's just quickly go, we'll have a look at that in a minute. So in the 901s, one of the issues that's been raised is where there is a balance effectively across all of the three provisionals. The running balance is non-zero, and that is then appearing as a line in the text paragraph within the 901 letter, showing that you've got a provisional instalment balance effectively, and that is then being added together with the total of the year-end account, and you're getting those two rows appearing in the 901 letter, and then in the remittance section, those two balances are then also coming through. In this example, what's happened is when the matching of the individual instalments has been done, the variance has been placed against terminal tax. So this is one example where you can choose to apply the variances here rather than against the individual instalments, where obviously payments actually have matched the original due amounts, and getting this net zero value, you're actually getting a true reflection of how the instruction to the client was paid, and in terms of the due amounts that were originally generated. These obviously, carry on.
Sorry, I was just going to say the scenario here is that, yes, we still want everyone to put the variances against the first provisional instalment if that is what it's regarding, but the problem is that when you come to do the terminal tax, it will show, for example, the terminal tax to pay is 20,000, but then it shows a credit against provisional outstanding of maybe 10,000, which is the sum of all of the variances.
Yes. Yep.
So the way to get around having that extra line, which looks a bit weird on the letter, is to put all of the variances in the terminal tax or year-end tax area. So we would like feedback on that.
The transactions are still dated. They are still dated according to the instalment that they referred to, but they're just being grouped under this section. So in terms of them being summarised together, they are appearing like that. All right. In fact, this is also another one of those examples where there was the duplicate match. So we'll just rematch that one again, and see now it's actually producing the correct figure. No variance created because this tax to pay figure is reflective of RIT less the total of the provisional instalments and their variances. So anyway, let's just quickly look at that just to demonstrate it rather than just talking about it. So if we select that and go into the letter creation, and just pull that through, so you'll see here we get just a terminal tax row. In this case, it does have interest and penalties, so it is its own line, but we don't have the provisional instalment row appearing above it. And then down in the detail, we don't have the split between provisional instalment, provisional tax, and end of year tax. So what's often happening because of those variances, and I guess as well, when people have underpaid or overpaid, regardless, that you are ending up with potentially a credit value showing in here. The total amount will always still be correct. That is, I guess, is the final point, but it just does look a little bit odd having potentially credits under provisional tax. It does indicate that an overpayment has been made, but it isn't always that clear to the end client.
So we are looking at, and as we are looking at other options for the letter, aren't we, Nigel?
Correct. Yeah, we're looking at whether we can just revise that just to combine that rather than having that split between provisional tax. I mean, it's okay to have obviously provisional tax when it is a provisional tax letter that's going out, but when it is the terminal tax letter, just combining the entire running balance into that one figure rather than splitting it across provisional and the terminal tax. At the moment, as I say, going back to what appears in the 901 grid, it's splitting the two columns out. Basically, you're getting this terminal value and this provisional value when it does have something, which we're going to have when there was a provisional outstanding value that was transferred over. But we can combine those in future so that we just get one row for terminal tax.
And the reason that this has really come up is because of the way that IRD have changed the system to a billing system, which is where you end up with 3 or 4 final assessments.
Yeah, we always in the past used to just do a running balance, and you could kind of choose whether or not you wanted to do any kind of matching of individual things. Now with the new system, they kind of all the assessments tie together. They're collectively sort of add up to RIT. So yeah, it's very difficult to allow either force users into having to use one system or the other, and also cater for whether people are doing matching or not. We're leaving that choice up to end users, but in both scenarios, we need to make sure that the end result is works out the same. And by doing this effectively running balance-based calculation, we now get that. Again, by doing that, we've introduced the provisional outstanding balance coming through into terminal tax. So that does result, when we have an example of it, so that does result in these examples. Previously, we wouldn't have had that. We wouldn't have had this provisional figure and terminal collectively in the same 901. But we need that now to reflect that running balance. All right. Does that make sense? So let's just move on to some more examples. Again, we're kind of now just kind of repeating effectively the examples that to some extent we've already seen. The point is that in some cases we've ended up with a variance that needs to be cleared by unwinding and then redoing the assessment. So here's another example of that. So we've ended up with this variance here. If we undo the match and rematch it, this is one of these cases where we do actually have a valid 1 cent variance, but you'll see that the net effect now does bring us back to a correct zero balance in this scenario. Okay. Yep.
So Nigel, can we just go back to there seemed to be some questions about your first example where there was the 11,599.
All right, let's look at that. 991.
So let's just have another look at that. And what it is here is that I think that's made things a little bit confusing is that you do have the balance of 11,599 in the ledger running total, but not in the IRD running total. That is because the amount due in the first and second instalments haven't been matched.
Correct.
So that's why you've got that balance difference. So I hope that makes it clearer.
Oh, sorry, yes. In this example, what I should have done, say what we ended up doing by not matching was generating this variance. Let's just undo that and let's do a better job of the matching.
Yes.
In this case, we've got the assessed refund of the 1946-14 refund.
So we can actually match that against all of them. Yep.
And get a zero
that
value.
Then resolves the 11,599 outstanding. And that does seem to, I've seen a couple of cases of that recently, and if you're on the call, you know who you are. Occasionally there has been a scenario where there has only been one assessment figure. It's almost like the old world, one assessment figure coming through rather than the 3 or usually 4 return assessment prov reversal entries.
Yeah, that's quite typical when there's a refund, because effectively they're saying there wasn't any provisional payment required, so we're not actually generating like a reassessment as such, because they may not have realised that you were even generating provisional instalments in the first place. You've got that knowledge, the ID doesn't necessarily have it. So yeah, they might, like in this example, is a good example of that. They've just done one assessment of a refund at the end of the year, and we can cast that over all the instalments.
All of them. Cool. I hope that makes it clearer to everyone. Okay, off you go, Nigel, on to the next one.
Okay.
Aren't I lucky? I get to be the one person in the whole 70 people who can talk to you.
All right, so in this example, so this is what I want to just show you to demonstrate again that issue that we introduced with the recalculation of the tax to pay, where there may be variances still being retained, where variances had been created, where the matching of the tax to pay had occurred. I'll in the background run a little SQL script which is planned for hopefully overnight tonight. We'll keep you informed on that, so that'll be delivered automatically through the overnight feed. But if we just make a note of here, at the moment we've got this return assessment figure coming through, sitting in there. If we just close that, and on another screen we execute the script that the installer will perform. And if we now go back into here now, you'll see that variance that had been generated has now disappeared. So it's actually now we've got ourselves back to 0. So again, once that version control, or that should I say the overnight TDS update has executed that script, the recommendation will be that tomorrow first thing, if you're going to go into the 901 application at all, is that you clear out your list and regenerate a new list with the calculations based on the revised figure, having removed that incorrect variance. Okay, let's just go and have a look at the last couple of examples. In fact, this last one here, 1534. Okay, I guess what I really wanted to illustrate here is that we've obviously been talking through where everything has been matched, and again, it's really to illustrate the fact that the change that we made around the calculation of the terminal tax was to deal with both scenarios, whereby if you have or haven't done matching of the assessments. So in this case, we've got 3 provisional assessments. They differ from the original amounts due that were calculated. And we've ended up with a term, a final wash up figure of 8,460 here. If I actually individually start matching these transactions, we obviously start generating variances. And if we refresh that, you'll see that this figure then starts changing to reflect the new running but adjusting figure to bring everything back to RIT. So if we match And again, if we just refresh that, yeah, it's been done. And the third one, okay, they all come through, and then we have the final assessment here, which again, in this case, is 0. We don't need, well, we can put it in there just to complete the job.
So that
Okay.
return calc figure is no longer the figure that is in the tax return.
Sorry, the return.
It's that tax to pay calc figure used to be the figure that was in the tax return. That is now it's effectively an adjusting figure.
That's correct. So it's basically always, it just refers back to the original RIT figure we had, and it's then subtracted from that the totals of the first, second, and third provisional instalments and their variances if they exist. So in both cases, whether we just were working off the original due amounts, or in this case now we've taken into account the variances, this tax to pay figure has been adjusted to bring it back in line with RIT, so that the cumulative total, and as I say, what we end up with is, and the important thing is that this tax to pay figure in both scenarios is the same. So it always gets this figure. If it needs to be adjusted to keep things in balance, it is adjusted to reflect this figure here.
Okay, do we have another example of that, or maybe we should go over that again next time, because I think that's quite complicated.
Yeah, it's again, the reality is that in all cases you should just be able to do the matching, and with the new change that we have, with this change that's been implemented, we're working towards getting the actual processing script. So when new transactions are coming down, when you get these new assessments, again, depending on subsettings, so that you can control whether it's automatic or not. But the idea being that if you choose to automate, we can effectively unwind prior assessments and apply new assessments and their variances if necessary automatically, and yet keep everything tied back to RIT, so we're not going out of balance.
Okay.
All right, well, that is really the guts of what we really wanted to cover today. So that has gone through the scenarios. We've got that issue with the variance. We've got the issue with where we were doubling up effectively on the variance that was generated against the, when the terminal tax was being matched. And so we've resolved those, but we do have this lingering some of these variance transactions that haven't yet been cleared up, which is what tonight's overnight process is intended to tidy up.
Okay, so
what's been the purpose, Nigel, of doing the updates through the TDS system or through the overnight update?
Yeah, so the great feature, at least with having the cloud services in place, is that if there are changes to or updates to the SQL database that we need to apply, we can do that through the TDS service. So where things like these calculations, those are controlled via stored procedures in the database, actual functions, rather than it being in code in the application, which would require a hotfix. We can, when it's applied specifically to the database, we can deliver those through the overnight TDS service. We just deliver a new version of the TDS service. The actual code of the service may or may not have changed, but we have the ability to then apply those changes to the database.
So just one last thing that's been causing a lot of comments and concerns is the tax summary. So we had a look at that one particular example there, but yeah, if we can go over the changes that were made on the tax summary page so that it's easily explained.
Sure. Okay, well, let's maybe go and have a look at there's one that had some balances. Let's go look at 707.
Oh, we've already got that one on the right.
We've already had a look at that one? Yep.
Yep.
No, let's go.
I want one that's got more stuff in it.
All right.
So that's a refund one, but can we have a look at the tax summary page for that?
Okay. that one there. All right, so again, we're coming back to the thing. RIT, residual income tax figure from here, is the same figure that we see down here. Payments, so those are we've got the payment, the 14,679, and then we have transfers, which is reflected by this transfer here, 6908, and that leaves us with as I say, at the moment, this 1 cent variance isn't being reflected in this figure. That's the one outstanding issue that we have is if a variance is generated or required, because there actually literally is a difference between what was lodged and what has come back from ID in terms of an assessment. That 1 cent is still showing up here, so that's we need to do some further work on that.
Mm. So is that to do with our calculations of tax not meant?
Well, it's a trick. It's around there is that 1 cent difference there, and just in terms of the way the calculations are being done, we didn't want to include. That we needed in certain scenarios to be able to exclude the variance applied to the year-end value. Certainly in terms of doing our variance assignment, because say what we were getting before was that double up as a result of including it. So we've excluded it from here. Again, we just need to look at whether or not we can get that back in easily, rather than without creating another bug as a result.
Yeah, so the key thing here, if you can just minimize the ledger or the 901 thing so that we can see the tax summary, is that, and we can make that a little bit bigger so that if we can, is that the 2019 year-end figure is the residual income tax figure. So everyone can see that from, they probably can't see my mouse. And then the payments are any payments and then the transfers. And what was happening originally was that there was some transfers and variances and things being shown twice or in the wrong place or something. What was the story there? Can you remember?
So again, that was around when the original fix to the terminal, to the refund transfers appearing incorrectly, that was rectified, but introduced the bug around the duplicating of the variances. So that was affecting these figures. So that's now been rectified. That's resolved.
So
that. But the bug. So the point is that this whole row now is effectively a year figure rather than post the RIT less spot the provisional tax figure that was reflected in the return. Remembering that this figure here that's showing in the return is a moment in time. So that was just at the time the return was prepared. So whereas this now is reflecting the current state of the ledger, and it's a full year to date figure.
Yeah. So originally on the original tax summary, it would have said refund of 689810. So instead of that is the amount due of residual income tax less any movements, whatever they are, payments, transfers, etc. So it does give a more thorough picture of the client's tax obligations throughout the year.
Yeah, that's correct. Yeah. So it's not a post. Again, it's different. It's a different calculation. But what would have typically have, again, if we took out some of these direct credits and so on that have actually would have been applied, would have come through after the return lodgement. So these typically wouldn't have been present at the time of the original tax summary being generated. Then what would have shown up as the balance due would have been effectively reflective of the
refund.
Of the refund.
Yep. So it is just a sort of education piece and a change of focus when you're talking to clients, or when you as accountants are talking to clients. It is a change to the information that's there that just needs to be explained.
Correct. Yes. I mean, again, in theory, at the time of this tax summary report has been generated, typically, say, obviously, you wouldn't have these other transactions. So
because it wouldn't have been filed.
No, correct. You would have typically had the 7780 here. You would have the 14679 coming in here. I guess in the past you would have had this figure here showing up as the calculated amount due. Now we're effectively just recasting a full
And
year's
showing
calculation and showing it
Yep.
across all.
Showing
across
it
all
as
the
a balance
periods.
due instead.
Yep, it's this balance due is what you would see instead of that figure showing up over here. Correct.
Cool. So I think if that's all of the examples, I think that is all good.
It is now. I think, yeah, just to reiterate again, so once we deliver this fix via the TDS service overnight, we'll keep you posted on that. But again, the thing you want to do is when you go into the 901 application is to delete out the current transactions and regenerate a new list, having had that script applied, and move forward from there. And obviously, if you do encounter any other issues around the calculated balances, we certainly would like to know about those. And in that case, yeah, we definitely would prefer to see a tax console ledger page view, because that shows variances and so on, rather than out of the tax manager. And where if there are figures that are affected in the payment schedule, yeah, then obviously a screenshot of the payment schedule would be required.
So we have looked at the wording on the tax, just getting back to the tax summary again.
Yes.
We have looked at the wording and it has changed a little bit, hasn't it? But the calculated amount due is legitimately being residual income tax. It is the amount of tax due by that client for the 2019 tax year.
Correct.
So, and then it's the payments and transfers that have been applied against that. So there's just been some comments about changing the wording.
It currently says terminal tax refund, and I guess everyone's always associated that with the post-provisional wash-up figure, whereas now effectively this row is the full year's summary in terms of payment schedule information.
And those eagle-eyed people watching this would have seen in the ledger that that's been changed as well, that we're looking at changing that to, rather than having terminal tax.
Yeah, so
year end.
That's right. So where we're seeing there in here and in the ledger, then it's pulling from the same information. So there's a description in the database that describes that particular value. All right. I guess the other thing that, in terms of if you want to provide some feedback, one of the things that consequences of this sort of summarized view is that in terms of the transfers and so on, if there are IR526 donations that are being reflected in here, it's in the past, in many cases, that was all that would have been in here because of the exclusion of the activity during the year being reflected in these other values. So one question, I guess, is would you like to see in future this split into two rows, that we actually itemise that into a separate row, the IR526 tax credit information? So if you've got feedback or opinions on that, we'd like to hear. And another option, potentially, again, it gets a little bit more complicated, but we could potentially look at, have to do a bit more research to see what edge cases would potentially prevent it, but we could look at splitting this row into the provisional values and then the terminal wash up. In that scenario, at least some of these values would be more transferable to what you see in the 901. So in the 901, where you end up with sometimes those credit provisional balances coming through, you would see those same numbers appearing in here. At the moment, sometimes those numbers you think, well, heck, how do we arrive at that? And it's if you go back to the ledgers, you can see that it is the balance of your provisional instalments, where often they've been overpaid or variances have reduced the amount due on those provisionals. You'll end up with a credit value, but that isn't reflected anywhere specifically as a value in this current summary row. So if you've got an opinion on that, we can have more discussion on where we go with that.
So what's the plans for the future webinars, Andrea? It's one in 2 weeks, did we say?
So we'll review, there are some questions that have been posted. Hopefully some of those have been dealt with throughout the call. But yes, if everyone can send any specific examples that they have through to support@reckon.com with the subject line, and we can again try and sort of wrangle those into a way that is straightforward, so that we can identify which ones are all similar, and then we can just work through those. And I am aware that there is a lot of information here to try and get your head around, so it's quite possible that we will just repeat things, the same thing, through the next webinars, so that we can, through various examples, be able to work you through this so that it will become intelligible. Shall we use that word?
Yeah.
You're going to get it. You will get it. Come hell or high water, you guys are all going to get it.
Excellent. Okay, on that note, shall we end for today and say thank you very much everyone for attending. Again, apologies for what happened yesterday, and yes, I hope today's been useful for you. Thanks, Nigel. Thank you, Andrea.
Thanks all. Bye-bye.
Bye.